Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Beijing blinks. China weighs suspending its 125% tariff on some U.S. imports, including medical equipment, industrial chemicals, and plane leases. Exclusive. My interview with Qatar Airways CEO Badr Mohammed Al-Meer on how the Gulf carrier is navigating through the tariff storm and continuing to grow. And the IMF appoints its first mission chief to Syria in 14 years, welcoming the nation back to the international table in a joint statement with the World Bank and Saudi Arabia. We'll get reaction from Karam, Shaar, chief economic consultant from the Office of the UN Resident Coordinator in Syria. Well, it's just gone 8 a.m. across the Emirates. I'm Johannesburg in Dubai. And let me just start off by saying, if you're struggling to get up to speed with all of the tariff headlines that have been hitting, you're not alone, because it has been really tricky this week to stay on top of everything that's been coming through from the White House. In addition to China, the latest being a headline that just dropped about 15 minutes ago, saying China are weighing exempting some U.S. goods from tariffs as costs begin to rise. And here with specific reference to some of the goods that are subject to 125% tariffs. So they're thinking about some exemptions. That is a headline that has just come through. And of course, in general, what we have seen in the last couple of days is some of that uncertainty from the market has started to subside. We're seeing equities move back positive again for the week. The S&P is tracking 4% gains. The Nasdaq is tracking 5.3% gains for the week as a whole. And one other thing to watch as well is yesterday we had those results come through from Alphabet. So both Tesla and Alphabet reported this week. The numbers came through better than expected. So you can see today that there is a lot of optimism in U.S. equities. The handover from most of these Asian Pacific indices also positive as well, leaning towards the green. 10-year yields, we are back at around 4.3%. And again, stabilizing around here. There was a bit of an upward move earlier on in the week, but stabilizing here is where we're at. Some dovish commentary coming through from Fed speakers overnight, Christopher Waller, Beth Hammack, both suggesting that a June cut could be on the table. There's about 16 basis points priced in. So keep an eye on Fed commentary. And then the USD today seen higher for a range. We're seeing a bit of love going to the greenback. It's about 0.4% higher with the risk on sentiment. But flip over. I just want to draw your attention to some of the price action we've seen in gold this week, because for the week, we are actually basically flat. But interesting that a couple of days ago, when we saw that big bounce in equities and sentiment started to turn, a lot of the money that actually went into gold started coming out again. So earlier this week, we dropped about 3% in one session. And the last couple of days, we're down about 1%. So it tells you that we're coming off some of these very stretched levels, with gold at some point making record highs day after day after day. So we're back at around 3,300. That's the picture for where gold is right now. All right, let's go back to that top story, though. Bloomberg has learned that China is considering suspending its 125% tariff on some U.S. imports, including medical equipment and industrial chemicals like ethane. Let's bring in our China correspondent, Minmin Lo. Minmin, first of all, let's just start with that headline, and then we'll talk about the broader dynamics between China and the U.S. What do we know about what China may be considering in terms of an exemption?
Yes, this is based on what sources are telling us. As you mentioned there, industrial chemicals like ethane as well as medical products, because China still relies heavily on U.S. imports when it comes to things like MRI machines, ultrasound machines. China is also the world's largest plastics manufacturer, and ethane, one of the raw materials, is primarily from the U.S. as well. And many of these plastics factories will be facing closure if they will have to pay those tariffs. That means that they will be making losses, because local supply of ethane is far from enough to plug that gap. Also, the leasing of planes could get exemptions as well. Many Chinese airlines don't actually own their own planes. They lease it from third parties. And again, the tariffs could be too much for them to bear. We're also seeing local media reports citing anonymous sources that 8 semiconductor-related products, not the memory chips though, but related products, could be exempted as well. And some of these moves really mirror what the U.S. has done so far by exempting electronics, things like computers, smartphones, memory chips, hard drives, flat screen displays from those 145% tariffs. So it shows that both sides are seeing some pain points that are getting too difficult to bear. You got to wonder at what point these two countries are going to come together to finally de-escalate escalate things.
Yeah. And of course, there's been so much back and forth between the two sides about whether talks are actually happening. U.S. President Trump is saying that discussions are taking place. China then saying that they would like to see some of those unilateral tariffs removed. So what do we know about the actual state of discussions between the two?
Yes, it's actually been really confusing because the two sides have completely contradictory reports. U.S. says that both sides have been having daily interactions, that there was a meeting this morning, but China says there has been no talks ongoing whatsoever. So it's hard to tell who is telling the truth because both sides can't be right at the same time. But bear in mind, the U.S. is now hosting a few events, including the G20 Finance Minister Summit, as well as the IMF and World Bank meetings. So you have some of these Chinese officials, including the PBOC Governor Pang Gongsheng, Finance Minister Lan Fo-an. They're all in the U.S. right now. This is the perfect opportunity for both sides to have a face-to-face meeting for the first time since Liberation Day. But at least from the Chinese side, there is no confirmation of any bilateral meeting. President Trump said there was a meeting that happened this morning. He didn't specify who met whom, so it's all very mysterious, and it's also not clear what level of this meeting is happening and what stage of these talks are ongoing. China is insisting the U.S. should remove all unilateral tariff, although the Finance Minister Lan Fo-an this morning said China still advocates for this dispute to be resolved through negotiations and equal dialogue on an equal basis.
Yeah, so interesting. It's really difficult to stay up to speed with all of the headlines coming through. But for now, it does seem like de-escalation is the path that both sides are preferring to go down. Bloomberg's China correspondent Min Min Lo. Well, a headline has just crossed, and this is pretty significant, I would say. The FT is reporting that Apple plans to source all iPhones sold in the U.S. from India instead of China. Now, it has reported that this could happen as soon as 2026. That is next year. And you have to think about how easy it's going to be for Apple to move the bulk of its manufacturing activity away from China to India. We asked Dan Ives about that last week, a tech analyst, and he said that it's not something that they can turn around in 1 year. He thought that it would take at least 3 years to shift a significant amount of that manufacturing activity. But FT reporting that it could happen as soon as 2026. I would just leave you with another statistics. About 50% of the smartphones that are sold in the U.S. are Apple iPhones, and about 80% of those iPhones are manufactured in China. So you can clearly see the economic imperative for Apple to want to shift their manufacturing base away from China to India. So this is a headline that has just dropped from the FT. Well, global stocks are on a fourth day of gains amid signs of progress in trade negotiations. The latest Fed commentary also signaling openness to cutting rates earlier than expected.
It wouldn't surprise me that you might start seeing more layoffs, a tick up in the unemployment rate going forward. If the big tariffs in particular come back on, I would expect more rate cuts and sooner once I start seeing some serious deterioration in the labor market.
Joining us now is Aberdeen Investment Senior Research Economist Sree Kochugovindan. It's really good to chat to you, Sree. Things seem slightly better, I think, since the last time we spoke. The Bloomberg have an index called the Uncertainty Index, and it's started to pull back from the record highs we were at a couple of weeks ago. Does that tell you that perhaps the worst is behind us in terms of all of these escalatory things that people have been saying about tariffs?
I think there's obviously been a lot of optimism recently, and I think there are a couple of drivers there. As you say, the tariff backdrop has steadily eased and improved. And the second thing I'd say is the US Trump administration's rhetoric towards the Fed. I think that was very worrying, particularly for the bond markets just quite recently. So I think those two factors easing has been very important for the markets and the sentiment. However, we still have a way to go, I would say. I think today's news from China is very important. The fact that they have offered something in return. They've been very, very defiant so far. And I think that's a great step forward. But we still have a lot of uncertainty. And a lot of these trade negotiations have a long way to go, whether it's with China. That will be the longest, the most painful negotiation. But even the quick wins that you would expect, say, Japan or India, even those are just memorandums of understanding. Those are just frameworks. And that, again, will take many months to really resolve. So a lot of uncertainty in the meantime, for sure.
Do you think where this ends up is essentially a patchwork of different tariff regimes applied all around the world with the US, depending on what deal that country, that bilateral deal that country can get with the US? I mean, it's still going to be quite tricky to navigate, right?
Absolutely. And I think if we take, again, the quick win examples there, the example of India, there is some progress. And I think the fact that Apple iPhones are now going to be shifting towards India, timelines permitting, that's very good news. But you still have some of the caveats that JD Vance has been asking for, increased imports of US LNG into India. Now, that's very expensive for domestic manufacturers, and that's going to be quite challenging to try and work out these details and niggles. I mean, what is the ask for each country, and how practical is it for each country? And so I think those will lead to, even for the countries like India and Japan, it will be a bumpy path going forward. And as you say, it will be a patchwork where we're expecting different tariffs for each country eventually after we move past this 90-day deadline. But I think the average tariff is still going to be relatively high. Consensus seems to be 10% baseline and 60% in terms average sort of tariff afterwards for China. But we need to take into account that sector-specific tariffs are going to be in place for different countries, and some of those reciprocal tariffs may come back. Maybe not in full force, but potentially on average, we could see around half of those coming back. So I think there's still a long way to go before we can be fully comfortable. And in the meantime, obviously, there's a hit to data. We're seeing it in the PMI surveys, the details there. If we look at the components over future outlook or hiring intentions, there is a lot of uncertainty there, and investment intentions will be hit. So that will start to materialize in the hard data second half of the year.
Yeah, but Sree, there is one notable difference now, which is we are seeing a recovery in U.S. assets, broadly speaking. All of the U.S. Financial assets that had got sold last week are being bought into. We've seen a recovery in equities. We've seen it in the dollar. We've seen some stabilization in bond markets. Is it safe to say as well that that theme of the end of U.S. exceptionalism may have also run its course as well, and that people will start buying back into US Inc. again?
I think in terms of US exceptionalism, how do we define that? We think about the last couple of years where it has been very concentrated in US and a specific set of US stocks. That theme has probably run its course now. And I think a lot of clients are still a bit wary. We've had a lot of U-turns in terms of policy. Rhetoric can turn on a dime. And that means that diversification is becoming more of a concern. And I think this could be the opportunity to start looking elsewhere. Who else could be the beneficiaries as these supply chains are obviously moving in front of our eyes, actually. It takes time for supply chains to really settle, and there will be some potential choke points going forward. But I think this idea of US exceptionalism, I'd still be quite careful. There might be pockets of opportunities elsewhere, and I think there will be still a shift towards greater diversification. So that concentration that we saw in the last year or so, that's most likely behind us.
Sree, always a pleasure to have you on. Thank you so much for getting up early to chat to us. Sree Kochugovindan, Aberdeen Investments Senior Research Economist. Well, up next, Qatar Airways says it can withstand the shocks from higher tariffs as the airline considers expanding its fleet. My exclusive interview with the CEO, Badr Mohammed Al-Meer, coming next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersechi in Dubai. Qatar Airways says it can withstand the shocks from higher tariffs thanks to a stock of aircraft spares that might otherwise be harder to source. I spoke exclusively in Doha to the airline's CEO, Badr Mohammed Al-Meer, who also discussed the company's diverse fleet and the potential impact of delivery delays.
We have an existing order of 78-9, of 351,000, of 321 NEOs, 777-9, and we continue receiving the 78-9 and the 351,000 as we speak. We received one a few days ago. We're receiving another one next week. So this continues to we continue to put more metals into our fleet. The 321 NEOs, we will start receiving it in the upcoming year. The 777-9, 777X, we're expecting to receive it end of 26 or beginning of 27. So we continue adding more aircrafts to our fleet. This is from one side. On the other side, as you're aware, we have released an RFP for a new order of wide bodies. It was, I remember, March or April last year, and it is going according to plan. We were anticipating or planning to announce it in April. We might be a few weeks late. So we're planning today to announce this order maybe in 3 weeks, 4 weeks. So we have so many things to wait for, from our financials to our new fleet order, which will all happen during May.
Okay, so let me just go back to one thing you mentioned about the 777X. You said you'll likely take delivery towards end of 26, maybe beginning of 27. So that means the new business suite that you're rolling out, Q Suite, will be first operational when that plane ultimately gets delivered.
This was the plan, to have it on the 777X.
Yes.
But because of the delays that we have noticed in the delivery of the 777X, we are working closely internally to maybe have it on the later deliveries of our 351,000. And this is the plan that we are studying internally. We are almost 80-90% almost done on how to achieve this. And I think you will see it on the 351,000 before the 777X.
Have the delivery delays been difficult to deal with?
Yes, it is. But this is a problem. It's not only impacting Qatar Airways. It's impacting everybody else in the industry. The advantage that we have one of the youngest fleets in any major airline in the industry. So this gives us a bit of a room. If delays are 2 or 3 years, this means our fleet will go will move from an average age of 8, 9, 10 years to 12 or 14 years. So this has given us a room to basically, again, absorb those delays, in addition to the deliveries that are taking place as we speak now.
So let's go back to that wide-body order that you mentioned. Can you give us visibility on whether you're leaning towards Boeing or Airbus?
The reason that we went for an RFP is basically to get the best price. We are operating Boeing and Airbus. We have Boeing and Airbus in our fleet, and we see how they're performing. They're performing excellent. So the intention for the RFP is to basically get the best commercial offer from both manufacturers, let them compete, and we will get the best out of any of them. So today, as we speak, it is still fair game between both of them. A decision will be made in the next few days.
Well, I can think of one person who likes making a deal, and that is President Trump. Yeah. Have you had any communication from the White House about a potential order to Boeing?
We're getting, of course, it's a big order. It's a sizable order. We're getting communication from the US and Europe as well, just to understand where and when we see this order is going to take place, just for information.
One thing that you've talked about in the past is commonality of your fleets and the fact that you have many different types of aircraft. Are you thinking of perhaps streamlining it, making it more homogeneous? And if so, what are some of the aircraft that you think you might give up?
It is. It was a problem. It was a problem when it comes to supply chain, when it came to spare parts, to the training of our pilots, of our cabin crew, of our MRO, hangar capacity. So it basically, we got a few issues and few problems because of the wide options of aircrafts that we had in our fleet, and we're trying to streamline to basically move to a fewer type of aircrafts in our fleet. It will be two types of wide bodies and two or three types of wide bodies and one type of narrow body.
Yeah. Can you give any visibility on the Boeing 737s, perhaps that you may look to retire as part of that plan?
The 737, we have only a small aircraft in our fleet, and part of our plan is to basically focus on one type of narrow body. And as you know, we have an existing order of almost 60 321 neos Airbus. So indirectly, you know where our narrow body strategy is going for.
That was Qatar Airways Group CEO Badr Mohammed Al-Meer speaking to me exclusively in Doha. And you'll hear more from Badr Mohammed Al-Meer in the 5th edition of the Qatar Economic Forum that is taking place from May the 20th to the 22nd in Doha. Learn more at QatarEconomicForum.com. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. The Israeli army is warning it will expand its operations in the Gaza Strip and make them even more significant and forceful. Chief of Staff Eyal Zamir says the military will escalate its campaign unless progress is made soon on freeing the hostages held by Hamas. Meanwhile, international pressure is growing on Israel to resume humanitarian aid to Gaza, with the UN warning of a dire situation. Reuters is reporting that President Trump is readying an arms package offer to Saudi Arabia worth more than $100 billion. The report says Trump is poised to make the announcement next month during his trip to the kingdom. The U.S. president is also set to visit Qatar as well as the United Arab Emirates. And a quick look at how equity markets are faring. FT futures leaning towards the green. It is a positive, looks like it's going to be a positive end of the week for all of these majors. The S&P futures up 0.5%. European markets also up 0.6% as well. And coming up, we're live to Damascus as the IMF and World Bank welcome efforts for Syria to reintegrate globally. Details next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Beijing blinks. China weighs suspending its 125% tariff on some U.S. imports, including medical equipment, industrial chemicals, and plane leases. Exclusive. Qatar Airways CEO Badr Mohammed Al-Meer tells me the airline can withstand the shocks from higher tariffs thanks to its stockpile of aircraft, and passenger demand is enough to keep ticket prices steady. And the IMF appoints its first mission chief to Syria in 14 years, welcoming the nation back to the international table in a joint statement with the World Bank and Saudi Arabia. We'll get reaction from Karam, Shaar, chief economic consultant from the Office of the UN Resident Coordinator in Syria. Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. So many headlines coming out from the IMF over the last couple of days, but I also just want to draw your attention to the tariff headline that came out from China about an hour ago, saying that China are weighing exempting some U.S. goods from tariffs as costs rise. So yet another sign of de-escalation on that front. There had been a bit of noise about whether discussions are actually taking place between the U.S. and China, but certainly the rhetoric that's coming out of both sides suggests that they are looking for ways to de-escalate alongside the other deals that the White House administration has been talking about signing, potentially with Norway and also with South Korea. Those are some of the countries that they have talked about. So the markets are leaning towards green. As you can see, S&P futures up 0.4%. We're up 4% this week already. Strong results from Alphabet yesterday also helping to lift the mood. The handover from Asia pretty positive too. Most of these indices trading in the green, 0.8% for the Asia Pacific index. 10-year yields at 4.3%. So again, stabilizing as well as we see some money pour back into U.S. assets again. Though people have been talking about some of the dovish commentary that's come through from the likes of Christopher Waller and Beth Hammack overnight, both members of the FOMC, suggesting that they could think about cutting interest rates at the June meeting. There's about 16 basis points priced in, so that's going to have an impact on the fixed income curve. And then the USD, for a change, is actually trading up today. It's slightly firmer, up 0.3%. So all of the U.S. assets that were being sold last week seem to be getting a bit of love as we head to the final trading day of the week. And then gold, which was the main outperformer for the last couple of months, you can see has also come off a little bit as well. We were down about 3% on Tuesday, I think it was, on the back of the risk-on sentiment in the market. So today we are stabilizing around 3,300, slightly weaker on the session. Now, Saudi billionaire Prince Alwaleed bin Talal is back in the spotlight, emboldened by Donald Trump's return to the White House. He had been laying low after being caught up in Crown Prince Mohammed bin Salman's detention of hundreds of the country's elites in the Ritz-Carlton in Riyadh in 2017. But he's back now and plotting his next move with billions of dollars riding on Elon Musk. So for more on today's Big Take, we're joined by Devin Pendleton, Bloomberg's wealth reporter in New York. Devin, first of all, let me congratulate you on the Big Take that's on our terminal today. Fantastic piece, and I would recommend all viewers take a moment out of their day to look through it. Really interesting to see the reemergence of Prince Alwaleed bin Talal. Once again, he obviously has been laying very low since 2017, 2018. So why is he back in the spotlight again? What is he looking to achieve?
Oh, thank you, Jumana. He is, I think he is recognizing that he is useful at this point. Saudi Arabia, of course, is looking, the entire country, the entire economy is interested in attracting more investment. Right now, they have their Bold Vision 2030 plan. And Al-Waleed, has a role to play because he has been a big figure sort of as a bridge between the Middle East and the Western world, including U.S. and Europe, for many, many years. He's a long history. He's known Trump for a long time. And he can kind of step out and engage with some of his former contacts. And that is part of sort of why he's rising to the fore at this moment. We're seeing him sort of, interviews, step out, and also kind of talking up Saudi Arabia and the opportunities there.
What is his connection to Elon Musk? That also comes up in the Big Take as well.
Yeah, so he has actually been a shareholder in X, formerly known as Twitter, for a long, long time. He first invested over a decade ago. And when Elon Musk stepped in to take it private, Al-Waleed was a vocal supporter. I think there was a lot of fear among the investors about what was going to happen. He was forthright in saying, I'm here with you. I'm going to roll my shares over. I don't even think Elon Musk really knew who he was at that point in time. But Al-Waleed definitely was cemented as kind of like a important figure for Musk at that moment, because obviously he needed his capital, he needed support, and he did that. So since then, he has maintained his interest in X, and he also has invested in XAI and has continued to hold that stake even when it merged X and XAI just last month. And he's now the second biggest shareholder in that merged company.
And in terms of projects, Kingdom Holding, what is the company that he founded and obviously owns and now his sons are a part of? What role are they playing in terms of participating in the Saudi 2030 vision?
Yeah, so Kingdom Holding they have a diversified portfolio, and they've always had interests in areas that are important and core to Vision 2030, which includes entertainment, aviation, hospitality. So in 2022, the Public Investment Fund took a stake. They took a position in Kingdom Holding, and up until that point, Alwaleed he's a 95% shareholder. So that was the first time he had a major outside investor. And since then, he's really amped up his bets in those important areas. For example, he has a Four Seasons that he's building on Shaar Island in the Red Sea, which is part of the PIP's Giga project there. He also is building Jeddah Tower, which is almost going to be a kilometer-high tower outside Jeddah, which is going to have offices and lots of development. So he's really been important in some of these really major projects they're working on that are going to be big boosts to the economy.
Yeah. Well, great piece, Devin. Thank you so much for bringing it to us and for staying up late to talk about it with us. Devin Pendleton, Bloomberg's wealth reporter in New York. You can read the full story on our website and the terminal. Just type Big Take, go. Well, the UK government has announced it's lifting sanctions imposed on Syria's interior and defense ministries during the rule of now deposed leader Bashar al-Assad. Meanwhile, the IMF has appointed its first mission chief to Syria since war erupted there 14 years ago. Joining us now from Damascus is Karam, Shaar, chief economic consultant to the Office of the United Nations resident coordinator in Syria. Karam, first of all, congratulations on your post, because the last time we spoke, it was under slightly different conditions, and we were not speaking from Damascus. So I believe you're actually our first live guest from Damascus since the fall of the Assad regime. It's really good to have you with us on the show. Talk to us about the significance of the IMF actually assigning a mission chief to Syria now, and what that means in terms of your responsibilities as economic consultants.
That's actually very significant, and it signals renewed appetite for working with Syria. Actually, the IMF had suspended its operations in Syria for 14 years. And the fact that now they have a new country mission chief actually is a good sign that the IMF will cooperate with the Syrian authorities. This is actually next to what has been already happening with the World Bank, which is also assessing the situation in the country and meeting with Syrian officials. The governor of the central bank and the minister of finance were both in DC holding meetings at the IMF and the World Bank. And I think the key significance of these developments would be basically signaling to the world that multilateral institutions are willing to re-engage with Syria. And in fact, actually, there will be funding that will be in the form of grants, not loans, from both the IMF and the World Bank if the conditions are met.
But surely a lot of that is contingent on the sanction situation as well. I thought it was interesting to note that the UK government announced on Thursday that it was lifting sanctions. But still, many of those US sanctions still apply. Are you confident that you'll get to a place where the US administration will feel comfortable lifting them?
The short answer is no. At least there is, so far, not enough reason to believe that the U.S. is open to lifting all sanctions on Syria. And for the World Bank and the IMF as Bretton Woods institutions, actually, they are heavily influenced by the position of the United States. And the position at the moment is we will keep, for the most part, we will keep sanctions on Syria. However, we are willing to start politicking with the leadership in Damascus. And one of the manifestations of that politicking is actually allowing the IMF and the World Bank to engage with Syria. Obviously, it's not only up to the U.S. to decide whether these institutions engage or not, but the U.S. plays a significant role in influencing the decisions.
Yeah, interesting. So the other thing that caught my eye is the statement that was released yesterday was a statement that was jointly written by the World Bank president, the IMF chief, and the Saudi finance minister. What role do you envisage for the Gulf nations, GCC nations, in the reconstruction of Syria?
Well, Gulf states, and here I would basically single out Qatar and Saudi Arabia, have shown strong appetite for engaging with the nascent government in Damascus. However, they know they have to tread carefully because the interim president is actually listed by the United Nations on their terrorism listings, and the country itself is reeling under a stringent set of unilateral sanctions from the EU, the UK, and most importantly, the United States. So for these Gulf states to be able to work with the government in Damascus, they have to coordinate with the United States and multilateral institutions, and the United Nations actually as an international institution. And that's what they've been doing so far, actually. It looks like they will support the country through these channels.
Just a final question to wrap things up. Do you have an estimate of what you foresee the reconstruction costs to be?
That's the most difficult question, actually. And to be honest, it has recently turned into a guessing game. And I would rather just wait for the Syrian government to have its appropriate assessment. Reconstruction is state-led, be it in Syria or anywhere else. And the Syrian government needs to come up with its own plan and assessment for us to start planning accordingly.
Yeah. Fair enough. Well, we'll wait and see what they come out with. Karam, really good to have you on the show today. Thank you for your perspectives. Karam Shaar, Chief Economic Consultant to the Office of the United Nations Resident Coordinator in Syria. Thank you. Now, South African Finance Minister Enoch Godongwana says the government will be looking into other resources to cover a revenue shortfall. He spoke to Bloomberg's Africa correspondent Jennifer Zabazaja after scrapping a proposed VAT increase, which was threatening to rupture the coalition government.
Parliament accepted the fiscal framework on condition that I will give political parties until the 30th of April to make submissions. And I must take into account those submissions. That's Parliament's decision. We're constitutional democrats and Parliament is therefore supreme. In this regard, I've taken into account some of the submissions by political parties. I make the point in the statement that none of the revenue proposals now can be applicable in this current financial year. While some of them are worthwhile, they may be applicable in the next financial year. However, I have looked into what else could be done to deal with the issues that we're going to be found by that. What I intend doing is that once the budget is fully passed, we're looking at different resources which we will make a special appropriation. We may make a special appropriation to cover the gap.
Have you looked at what that number could be? Because the gap is 75 billion rand reportedly. Yeah.
No, the gap is 75 billion rand over the medium term, okay?
Right.
Over the medium term, we may deal with a special appropriation to cover the gap in this financial year. And then during October, when we table the medium-term budget policy statement, we may then have a proper picture of what the revenue outlook is, and therefore what does that mean for the expenditure moving forward.
That was Enoch Godongwana, the South African Finance Minister, speaking to Jennifer Zabazaja on the sidelines of the IMF. Now, coming up, Kenya's central bank governor considers adding gold to the country's reserves. Details next. This is Bloomberg. Kenya's central bank governor is considering adding gold to its reserves to diversify its foreign exchange holdings beyond the US dollar and other currencies. Kamal Tuj spoke exclusively to Bloomberg's Jennifer Zabazaja on the sidelines of the IMF and World Bank spring meetings. Take a listen.
We have basically a group that is looking at the feasibility of doing it. And yes, it's something that we are actively considering.
How soon could we see that?
Well, I wouldn't want to put a timeline to it, just to let you know that it is something that we are actively considering.
For more, let's bring in Bloomberg's Andiro Ganga in Kigali, Rwanda. Andiro, so interesting time for Kenya, and obviously we've spoken about this on the show, that the existing IMF program was prematurely terminated earlier this year. So you can imagine it's a big moment for Kenya to be at these IMF discussions. But also interesting to hear from the central bank governor around maybe they're considering adding gold to their reserves right now. What more do we know?
Jumana, you're absolutely spot on, maybe, and a big maybe. But if you look at the circumstances leading to this, initially tariffs were just a threat. And then Kenya got slapped with 10% reciprocal tariffs from the U.S. Key goods like coffee, tea, fresh cut flowers are going to be affected. And this will have an effect on the economy. It will have an effect on FX inflows. And so we are seeing the central bank feeling the need to hedge against the dollar and also insulate the economy and insulate itself against the pressures that is going to come from the trade war. And you mentioned the IMF. Kenya forfeited their last review, and by doing so, they lost about $800 million. They need money. They need to look for money. The central bank has ruled out going back to the international market. Currently, interest rates are high, and that will only add pressure to their mounting debt burden. Instead, what they're going to do is they're going to try and get a new program with the IMF, same concessional terms, same policy, and also look into the local market, because he says the local financial market is deep enough to help the government finance its budget deficit. However, he says that he doesn't expect pushback from the conditionalities that will come from the IMF, unlike last year when we saw deadly protests that left 60 people dead. He's also very optimistic. He's saying he hopes the economy grows a little bit better this year in comparison to last year, and this comes against the backdrop of Kenya being touted to grow faster and bigger than Ethiopia.
Yeah, but equally, the other thing that is going to be impacting the Kenyan economy, those U.S. tariffs. And recently they did sign a EU trade deal. So I'm curious to hear whether the deal that was signed with the EU is going to be able to fill the vacuum that will be created by those U.S. tariffs.
To a large extent, it should be able to cover, and that depends on how far the U.S. is willing to push their tariff wars with some of these countries. Currently, the central bank estimates that the tariffs from the U.S. are going to shave off about 0.2% from the Kenyan economy. But if we contrast it to the EU deal, EU trade with Kenya has been growing, and it grew by 53% in the last decade. Kenyan exports to the EU were about 1.4 billion in 2023, and if that doubles, it's 2.8 billion. This goes into job creation, it goes into the economy, it boosts FX inflow. So it's going to have a positive domino effect on the economy. However, for trade to grow, there are a couple issues that Kenya needs to address. Its business environment, its investment climate, and this is a market that is characterized by unpredictable tax environment. It also has challenges when it comes to corruption, government bureaucracy, and also just institutional challenges such as regulation.
Bloomberg's Andiro Ganga in Kigali, Rwanda. Thank you so much for the reporting. And coming up, Saudi and South Africa. The two nations signed deals worth billions. We look into the details next. This is Bloomberg. Saudi Arabia and South Africa have held numerous meetings over the past year. That's led to deals worth billions of dollars into Africa's most industrialized country, with more corporate action in the pipeline. The rush of deal-making is part of a broader Gulf drive into Africa, with the UAE and Saudi Arabia in particular investing in mining, renewable energy, and agriculture. For more, we're joined by Lonnie Prinsloo, our senior Africa reporter. Curious to hear what you found out in terms of your own reporting, Lonnie, the types of deals, cross-border deals that are being inked between Saudi Arabia and South Africa. What are you seeing on that front?
Hi, Jamana. Yes, so exactly what you're saying. We reported over the year mergers and acquisitions and started noticing quite a bit more activity than usual in terms of buyers from Saudi. So there's quite a few big deals currently happening where they are bidding for South Africa's Shell downstream assets, for instance, through Aramco. We are seeing a group called the Zayed Group, also in a bid process to take a majority stake in South Africa's Barloworld, which is the sole distributor of Caterpillar. So there's billions being pushed in by Aqua in the renewable energy sector. So we've just started noticing this trend, and we sort of thought, take a deeper dive into it and see what sort of has caused this sort of additional deal flow between these two nations.
Yeah, and how is it likely to boost South Africa's economic situation? Because, again, things had looked like they were turning a corner. But, of course, with all of the noise out of the White House, the political tension with the White House, the tariffs, the outlook seems to be slightly bleaker.
Yes. So with the sort of trade war going on, a country like South Africa also has to sort of start looking at additional and newer trading partners. And I think that is sort of the effort that is being made with Saudi. Saudi, of course, wants to diversify its economy away from oil by 2030, in line with the Crown Prince's vision. And South Africa is the most industrialized country in Africa. It has quite a few well-run companies that are trading at quite a discount. So if you are a longer-term investor, you could see the value in investing in South Africa that's also on the doorstep of Saudi, and a gateway, often a gateway to other sub-Saharan African countries where you would want to trade and invest in.
Yeah.
As a result, we've seen almost monthly meetings.
Lonnie, gonna have to leave it there. Thank you so much for bringing us that reporting. Lonnie Prinsloo, our senior Africa reporter. That's Horizon's Middle East and Africa for the week. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.